Market ends in green but off morning highs. Nifty closes near 24,400 while sensex ends at 80,800 levels. Mid and small cap outperform. Auto, FMCG and energy stocks charge ahead while private banks slip in trade.
M&M shares gain after the company reports a strong fourth quarter boosted by healthy volumes and realizations. SBI and Kotak Mahindra Bank shares under pressure after SBI trims its growth outlook and remains cautious on margins going ahead. Kotak Mahindra Bank misses expectations as business growth slows to a 3-year low.
Adani Group stocks perk up in trade over Bloomberg report claiming talks between representatives of Adani Group and Trump administration officials. The Adani representatives have sought dismissal of criminal charges levied against him in an alleged overseas bribery case. The outcome of this is expected in the coming months.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the highlights of the day gone by and gear you up for the next trading session. I'm Surabhi Upadhyay. With me is Vinny Motiwala. And Vinny, not a bad day for the market. There was some red on, on the bank nifty, but otherwise not too bad.
Not a bad day coming in for the markets, right? At least the first day of the week, when you start on a good footing, you're happy with that situation, right, Surabhi?
No, absolutely. And I think the market was just gently building along. And it's anyway been, we're the best performing market if you look at the global backdrop after the Liberation Day tariff issue played out. And that simply continued. The Nifty continued to chug along. The bank Nifty was under pressure because of what we just told you. This slight caution that some of the large lenders are throwing up, whether it's State Bank of India. The Big Daddy itself talking about how, credit offtake, particularly on the corporate segment, maybe could be a little impacted because of tariff uncertainties. And Kotak Mahindra Bank. Growth really was the reason why these stocks were down. And they pulled down some of the peer names as well with them. But let's not, get too perturbed because there was plenty of other pockets of the market, including mid-caps, that more than made up for this banking loss.
Absolutely, more than made up for this loss. That's why that advance decline ratio was also a bit more in the favor of advances versus decline. And when you look at the mid and small cap, that saw an outperformance coming in the trading session as well. So that is something interesting to watch out for. Other than that, autos, Nifty Auto also gained more than 1%. M&M, obviously, good set of numbers. So that was something leading to and supporting the up move in terms of Nifty Auto. FMCG is another sector that was holding on to green as well. Third, after 3 days of losing streak, we've seen FMCG coming back in action today. Marico, good set of numbers coming in from that front. So that is also something that we're watching out for. So it'll be an interesting day today in terms of the trading session. While there was some bit of a red coming in from the banks, we did have autos, FMCG supporting some bit of that up move. Well, here's what we're going to start on with the show, and here's what we have for you all in store on today's edition. What we start with is going to be with the top movers and shakers of the day with Vivek. Well, the stock of the day is going to be Mahindra and Mahindra. We will give you the key reasons why the stock was buzzing in today's trading session. And last but not the least, we'll tell you which are the key market events to watch out for in tomorrow's trading session. Okay, and starting on with our first segment for the day, Vivek is joining in with us from the big wall to tell us the top stock movers of the day. Vivek?
Well, thank you so much for that, Vinny. Another session where you actually managed to end in the green. Advance decline ratio, like you mentioned, was very much in favor of the advances. List of top gainers, well, you have to start at M&M. Results came during market hours. Operationally, a very strong performer. The BEV segment actually turning a bit positive. This is something that the street liked, ended high by almost 3.5% today. The other stock that did very well was actually the cable and wireless pack top pick, which was RR Cable. Almost 13% higher, good set of numbers. Guidance as far as FY26 was concerned was quite strong. Street really liked those numbers over there. And when you're talking about the oil and gas pack, they were in focus today, especially IGL, the gas pack. IGL went ahead and did a second successive price hike as far as the key geographical area of Delhi was concerned. The margin that the company is trying to protect is something that the street liked, almost 7% higher. And you have to look at the crude oil sensitive stocks today. So the OMCs did very well in the session, along with that airlines too managed to enter the green. HPCL, one of the top gainers. Now, on the other hand, you also saw a name like Gravita, good set of numbers coming in from the company this time around, almost 7% higher. Laggards, some of the names that you did mention, you have to talk about Kotak Mahindra Bank. Despite the consolidation and the acquisition of the Stanley portfolio, growth there was quite tepid. Street didn't like that, almost 5% lower. SBI, like you mentioned, loan growth guidance trimmed lower. That's also something that the Street really didn't like. And lastly, one name from the broader end of the market, that was Jindal, saw a muted Q4, one of the top laggards as far as the NSE 500 was concerned today, almost 4% low. Cooled off, or some of the losses were trimmed towards the later half of the trading session, however, still down by over 3.5% today.
Okay, all right, Vivek, got it. Thank you very much for that neat summary of how the day was eventually looking. Well, let's bring in our guests. We have Anand Tandon joining in to talk about some of the fundamentals and sort of how we should be positioned on this market. Anand, in a bit, I think we'll have Sudeep Shah as well. I don't think we have him now, but on technical, Sudeep is going to join in. Anand, just overall, the earnings that have come through, do you think there is enough steam in Q4 numbers in the commentary to take this market higher? Because the rebound from the April lows has been very swift.
Well, that is true, but I don't think that we've seen any major surprises per se. And if you look at the estimates of earnings for the year that was there, let's say a year ago, for where we thought March 25 would be and where it is today, in fact, it has been a steady decline in terms of earnings expectations to the stage that you have now got into single-digit earnings growth. So now really that earnings is not going to be the driver. What you have to look for is the future earnings growth. Here again, we start with almost 14% expectations of earnings. I would argue that this year again, we will see some disappointment. You will actually bring the estimates down closer to maybe 10%, if not lower. And that would mean that it could be a bit better than last year because the last year base was fairly low. But you would still find that, maybe overall the numbers will still remain somewhat muted. So you are still looking at a market which remains relatively expensive. And you have to be careful about the choice of sectors that one is looking for.
Yes, absolutely, Anand. But, let's talk about Mahindra and Mahindra as well, because those shares were gaining in trade. They reported a strong fourth quarter number boosted by healthy volumes as well as realizations. Sudarshan is joining in with us now to give us more details on this front. Sudarshan.
So M&M has reported a strong set of numbers for Q4 of FY25, led by strong tractor margin than company has seen in Q4. Both auto and tractor have done better, but especially tractor margin that has come in at a multi-quarter highs. And on revenue front, it was led by healthy volumes that company has seen year on year. Auto volumes was up around 18%. Tractor volumes were up more than 23%. And recent price hike that company had announced, it has helped realization improve 5% sequentially and 11% year on year. And overall, on consolidated basis, both revenue or profit were up 20% each. But if we talk about the standalone numbers to which we are comparing with our estimate, we saw EBITDA improving by almost 40% year on year, and even margin rising to 14.9% at multi-quarter highs, and this was against our estimate of 13.8%. Now coming to the volumes front, both auto and tractor segment have seen healthy volume growth. And what about the outlook? Company for FY26 for tractor segment, it's seeing a growth in high single digit, and as far as SUV plus electric vehicle segment is concerned, it's saying that in FY26, it's likely to see a growth in the range of mid to high teens. So even for FY26, company is bullish as far as growth for the entire, both the segments are concerned. So overall, it's a very good set of numbers by M&M, as well as the outlook looks positive.
Let's talk about the big bank earnings now. SBI and Kotak Mahindra Bank, both those stocks under pressure after Q4 numbers. The street concerned with growth. Let's go to Abhishek for more.
Well, to begin with, the comparison shows that, amongst private banks, they have seen robust deposit growth on a sequential basis. For some of them, it's seasonal in nature, like HDFC Bank as well as Axis Bank. But this has come at a time when the industry is facing deposit crunch. However, we need to take that also into factor. SBI has seen the weakest deposit growth on a sequential basis in Q4 FY25 amongst large banks. So if you take a look, while private banks are stunting growth in corporate portfolio due to unfavorable yields. SBI is massively growing the book on a sequential basis. It's up about 5.5%. Now, net interest margin has improved sequentially for most of the banks. ICICI Bank and SDFC Bank seeing the most improvement in their net interest margin. However, for SBI, the margin has declined on a sequential basis by 1 basis point. Now, operational efficiency was the other area of focus amongst these banks, wherein the highest decline was seen for State Bank of India. Axis Bank and Kotak Mahindra Bank saw increase in their cost-to-income ratio on a sequential basis. Now, SBI saw its ROA, that is return on assets, decline quarter on quarter. Most of the banks have actually seen an improvement in their ROA on a sequential basis. Axis Bank and Kotak Mahindra Bank saw the highest improvement in the return ratios, that is return on asset on a sequential basis. Take a look at the valuation picture. Large private banks like SDFC Bank and ICICI Bank are trading at 2.7 to 2.9 times 1 year forward, while SBI is trading at around 1.5 times price to book value on a 1 year forward basis. Back to you.
Okay, Abhishek, thank you so much for that. Today we have seen both these banks in focus and under pressure as well. But we do have Sudeep Shah also joining in with us now for a check in terms of the technical front. Sudeep, we've discussed a couple of stocks. One is M&M as well as the other two banking names as well. So any view that you have in terms of M&M or SBI? What are the charts indicating for this? What are you watching out for?
Good afternoon. M&M, if you see on charts, it has given us a very strong reversal today. So what we feel is reversal backed by strong volumes, as well as there was a consolidation that was witnessed right from the month of February. So this the breakout has come about 2900 levels, and now sustaining above that level shows that the stock is now headed up to 3200, 3300 in the coming few weeks. And we feel that this stock should be added at the current levels, as well as on dips with a stop loss at 2940. So we are quite positive on this stock, as well as a few other auto names, and auto index itself is now showing signs of a credible rebound.
Right, and Anand, your view specifically, if I'm asking in terms of the banking side, Abhishek was talking to us about the banking sector, large banks, performance coming in as well. How are you viewing it? When you look at SBI, Kotak, nothing sort of an excitement that we've seen so far. So anything exciting that you're finding in this large banking space or the earnings that are reported so far?
Well, actually, if you find banks exciting, it's very bad news. So banks are best when they are boring. SBI has reported, to my mind, a superb set of numbers. They have perhaps, to my mind, over-provisioned because they already were doing so well in terms of the overall YOY growth that they perhaps didn't feel the need to actually report much higher kind of profit growth. The outlook for this year also remains somewhat benign, because you are looking at a cut in interest rates, perhaps sovereign debt getting into the index globally, etc. So you should see a softening of interest rates, and with the credit growth, with the deposit growth again coming back, you are looking at a situation where NIMs may not be very stressed. So I think stocks like SBI should be in part of your core portfolio and not to be fiddled with. Kotak, of course, is overcapitalized, so that is the only challenge that they have. They have also grown reasonably well. The only thing is that they are somewhat overcapitalized, and therefore their ROE tends to be a little lower. But that's only a matter of time before that also comes back into shape. So I would argue that all the top-rung banks with a good deposit franchise are companies that you want to have as part of your portfolio.
All right, got that point, Anand. Let's quickly move on and look at another pocket of the market that was up and about, and that was thanks to the drop in crude oil prices. Now, prices created almost 4% today after OPEC Plus decided to increase output by a higher than expected 4 lakh barrels a day in June. We saw lots of OMC stocks react positively. In fact, HPCL was rallying as much as 7%. Sudarshan is here with more details. Sud.
So crude sensitive saw a big move on both these sides. So why there was a big fall in crude? Crude over the last 2 to 3 sessions has fallen nearly 6 to 7%, and today intraday has fallen to lowest level, almost lowest levels the last time that we saw in 2021. So why there was a big fall? So over the weekend, OPEC Plus, which is led by Saudi Arabia and Russia, have decided to increase the production, and the increase is higher than expected. So increase for the month of June would be of 4.11 lakh barrels per day. Now following that, crude has fallen. Now, what impact it would have on all these companies? So first, talking about upstream companies like ONGC and Oil India. If there is a fall of $1 in crude, it impacts annual revenue in the range of rupees 300 to 400 crore for these two companies. Now coming how this impacts positively to downstream companies, or say oil marketing companies like IOC, BPCL and HPCL. So the fall of $1 in crude, it impacts positively to EBITDA in the range of rupees 200 to 300 crore for these downstream companies. Now last is why it's positive for paint company. So for paint companies, up to 50% of their input costs are linked to crude. So if there is a big fall in crude, it might have the positive impact, especially on the margin. So now the last question is, will there be a drop in retail fuel price after seeing a big fall that we have seen in crude? Last week, IOC in our interview had said that is very unlikely in near term.
Okay, Sudarshan, thank you so much for that. And Anand, coming to you, this is surely exciting, right? For banks, when you don't see excitement, it's fine. But crude prices falling is something exciting for a lot of companies, whether you look at paint companies, aviation, 40% of their cost comes in for fuel as well. What are your thoughts on any of these names? And do you think, is this a play or a story to look at right now, given that sharp fall in crude prices?
So let me give you a statistic which is a little, which may throw some water on this, that leaving aside the last couple of years where, after the Ukraine war especially, where there is, because of various disruptions, by and large, whenever oil price goes up, the market does well and vice versa. So actually, the underlying economic demand being robust, which is a sign which also reflects on the prices of oil, is more important than the price itself. But having said that, as you pointed out, many of those companies will actually benefit. Of course, as consumers, we are unlikely to, because the government will find clever ways of making sure that you and I don't get any more money in our hands, and it goes to the government's coffers. But most of the companies are, which are in the refining space, etc., will see some benefits. Marginal industries like paints will also benefit, but there the level of competition is so high that I wouldn't put, you will get some relief from them, but I don't think that you should be looking to, till the market shares get settled out, I don't think that's a great play yet.
Okay. All right. Got it, Anand. Thank you very much for that, to you and to Sudeep as well, for joining in and giving us perspective on the show. We do have to take a very quick break. Come back on the other side. We'll get you the top corporate voices and the key events to watch tomorrow. Welcome back to Markets Forward. Let's get you the key corporate voices through the course of the day. The management of Bajaj Auto said that April has seen a smart growth in two-wheeler sales as against March. The company also adds that FY26 domestic growth should be in the same range as FY25. Also, Bajaj Auto has taken a price cut in some entry-level models of the Pulsar, but then it has also hiked prices of some of its other models. So net-net, not too much of an impact. Export growth should be more than 10%, says the company. And next on our radar is RR Cable. That stock shot up almost 13-14%. The wire and cables company saw its shares surge after Q4 numbers came through. The management said that it has seen good demand in domestic and export markets. It expects double-digit margins in 2 to 3 years. The company has guided for good growth in exports in FY26. It also believes that entry of new players is a good sign and there is enough space for everyone to grow in. It's expecting its FMEG business to break even this year.
And moving on to some of these FMCG names on the corporate corner front, where Tata Consumer Products also on our radar today. The company is targeting to grow top line in double digit and faster EBITDA. That's not all. It aims for 500 crore rupees per quarter run rate from Capital Food and Organic India in H2 FY26. The company will be launching sports drinks in the next 15 days. We also have the management of Marico on our channel as well. The company has seen a significant improvement in rural demand. However, urban demand remains patchy. The management sees marginal cooling down of inflation, which is likely to improve demand. It maintains volume growth in the range of 6 to 7% in FY26. And before we wrap up, we bring you some of the key events to watch out for in tomorrow's trading session. Mangalam is standing by with that. Mangalam, over to you.
Well, some of the important results that there are tomorrow, we have Godrej Consumer, HPCL, as well as Mahanagar Gas reporting their numbers. But alongside that, some other numbers which will also be very crucial to track. We have a bunch of them. So we have something like a Radico Khaitan reporting their numbers, Polycab, after especially what RR Kabel did today. Paytm reports its numbers, and Bank of Baroda is the PSU bank that we will be watching out for too. But apart from that, we'll keep an eye out on Hoodco. Their board meets to consider fundraise. What is the manner and the amount of that fundraise is something that we will be tracking very closely. And moving abroad, we will keep an eye out on the FOMC meet that starts tomorrow. Obviously, the outcome day after, and we react to it 2 days later. So that's something we'll watch out for. What we'll also keep an eye out on is, the Treasury Secretary Scott Bessent testifying before the House Appropriations Committee. The outcome of that is something that the global markets will most definitely keep their eye out on.
Okay, all right, Mangalam, got it. Thank you very much. So packed day, as always, coming up tomorrow. But for now, from the entire team that puts this show together, many thanks for watching. And we have lots of other news and updates coming up right after this break.